In this video, the basics of grid trading in Forex. What it is, how it works, the different types of grid systems, and why so many traders love or hate grid. Grid trading is a very controversial topic. Some people use it effectively to generate consistent profits, but many other traders hate it and don't recommend it because of the excessive risk that it can carry. Grid trading, in its simplest terms, consists in placing buy and sell orders at regular price intervals, creating a grid of orders on the chart. Instead of predicting the exact direction, the trader profits from the price moving back and forth across the grid. There are several types of grids. Directional grids place orders only in one direction, either only long, buy, or only short, sell. Non-directional grids place orders on both sides, creating a symmetrical structure of buys and sells. Fixed leg grids use equal spacing, such as every 20 pips. Flexible leg grids adapt spacing to volatility or other factors, so the grid spacing doesn't look regular. In this example, the leg widens based on a multiplier. Grids can also be run with or without martingale. With martingale, lot size increases as the grid expands. This helps boosting the recovery, but it also adds risk. Without martingale, all trades are equal size. Let's see an example on the Euro-USD chart. Here we have a non-directional grid with a fixed leg of 100 pips and fixed lot size. The take profit is equal to the leg distance, 100 pips. Assuming we start from this point, as the price moves forward, it will start touching the grid levels, triggering new orders and take profit. Some of the orders will not close until the price reaches their take profit level, generating a floating profit or loss. As we mentioned before, grid is a very controversial strategy, and a lot is due by its pros and cons. The pros of grid trading are, it doesn't require perfect timing, being the entries triggered by price levels or distance from the previous orders. It doesn't require to pick the right direction, because it relies on volatility. It can be automated. However, there are also significant cons to grid strategy. Floating drawdowns can be hard to handle psychologically. It can require heavy margin to keep the grid in place. It can blow an entire account if not controlled properly. The best conditions for grid to succeed is ranging markets, or mean reverting ones, where price moves between regular boundaries. The worst conditions, with much greater risk, are market in a strong trend, where price move in one direction with little to no retracements. Grid trading can be profitable but risky, and it needs to be considered very carefully and tested thoroughly before applied to real money. If you are interested in testing an advanced grid expert advisor, check out our other videos and tools. We hope you found this video helpful. For more tricks and tools, subscribe and visit us at mt4gadgets.com. Trade smarter, not harder.